Ladies and gentlemen, dear guests, it is an honor for the Casablanca Stock Exchange to welcome you to the 24th Annual Conference of the African Securities Exchanges Association, which will be starting from today and will last until Thursday evening. This is an important and timely event for the African financial markets, especially in the context of the challenging pandemic situation. The COVID-19 pandemic forced the conference to transition to a digital model. Therefore, for the first time, our annual conference will bring together virtually experts from multiple institutions to discuss how African capital markets and securities exchanges can help with accelerating post-COVID economic recovery and how we can help companies raise money to expand and develop their business opportunities. Without further ado, please join me in welcoming Mr. Kamal Mokdad, President of the Casablanca Stock Exchange.
Chairperson of the Moroccan Capital Markets Authority, Mr. President of Asia, dear CEOs and Presidents, members of the Asia, dear guests. It's an honor for Bourse de Casablanca to welcome you to the 24th Annual Conference of the African Securities Exchanges Association starting today. Given the international health situation, this 24th edition is taking place in a digital format. This does not make it any less important nor less rich than previous editions. Within the next 2 days, we will have among us high-level speakers, professionals and investors from African and international capital markets to discuss ways African financial markets to support the emergence of the continent and particularly in the short term address the post-COVID economic recovery. Ladies and gentlemen, dear guests, given how the health crisis has affected our African economies, the choice of this year's conference theme couldn't be more obvious. Africa has both low-income, middle-income and high-income countries. It's home to 20 economically fragile countries. Even if the World Bank forecasts that some African countries could revive growth this year, COVID-19 has gripped the economy of the sub-Saharan region, forcing it into its first recession for more than 25 years and leading to a decline of almost 5% of GDP per capita in 2020. In West and Central Africa, growth even contracted to 1.1%. Announcements of large-scale projects fell by 62% or $29 billion against $77 billion in 2019. In North Africa, the hydrocarbon exporting countries like Algeria or Libya have recorded a strong recession in 2020, but can expect a substantial increase. For Morocco and Tunisia, growth would reach 4% in 2021. To overcome this situation and finance post-COVID-19 recovery, important funds need to be mobilized. During the 12th plenary session of the 76th session of the UN General Assembly, Macky Sall, President of Senegal, stressed the need for no less than $252 billion. In this context, our continent's financial markets are called upon to help alleviate the economic consequences of the pandemic and allow our Africa to maintain a sustainable and inclusive growth trajectory. African capital markets' great ability to mobilize savings, finance businesses being private or public, and support the development of economies is unmatched with its powerful capacity to connect large and deep liquidity pools with the needs of the real economy. Within this framework, stock exchanges are unique beacons of liquidity and transparency, permitting the effective dissemination of funding and economic data and allowing the multiplier economic effect to fully play its role for private markets. Nonetheless, much remains to be done in identifying concretely how these markets will be able to speed up the post-COVID economic recovery, to finance governments and infrastructure in the continent, to help state-owned enterprises to finance their development and diversify their funding base, and to raise the capital necessary for the development of SMEs, so important in terms of growth and job creation. By participating to this two-day conference, you will be able to hear informed views about this question and many more. I would also like to take this opportunity, ladies and gentlemen, to reiterate once again that Bourse de Casablanca is fully mobilized to strengthen the role of African markets, convinced it is the best way for a better economic prosperity for us all. In the past, we have undertaken concrete actions to foster collaboration at continental level. The exchange for experiences and technical know-how in various fields with several of our brethren African stock exchanges is common at Bourse de Casablanca. We are also actively involved in supporting businesses on the continent, particularly SMEs. For instance, we have a very fruitful collaboration with BRVM on the Elite BRVM Launch Program to better prepare SMEs on questions of governance and financing. We are obviously actively working alongside our African counterparts to bring the African Exchanges link projects to fruition. At Bourse de Casablanca, we are convinced that further integration and collaboration among our exchanges is the only way to further enhance the visibility and attractiveness of our markets to international investors and drive economic recovery. What applies to African recovery is obviously relevant as well as in Morocco. Under the leadership of His Majesty King Mohammed VI, the Moroccan government has been very proactive in dealing with this sanitary crisis and putting in place a comprehensive plan to tackle its economic challenges. Capital markets, and in particular Bourse de Casablanca, have an important role to play. Let me quote the recent report of the new development model. Revitalizing Bourse de Casablanca will be the first step to bring about the emergence of Morocco as the region's leading financial center, whether it be for facing up the challenges of the development or the imperatives of recovery from the current COVID-19 crisis. The capital markets will play a major role in Morocco's new development model. The development of Bourse de Casablanca will be, in particular, crucial for the development of these markets. Ladies and gentlemen, very conscious of the responsibility bestowed upon us, all exchanges as unique gateways to connect, to show the way to our local financial markets and link with the international community. I wish you a very fruitful conference with stimulating ideas and discussions. Thank you.
Thank you, Mr. President of the Casablanca Stock Exchange, Mr. Kamal Mokdad, for your speech. Let us now welcome the President of the ASEA, Dr. Edo Kossi Amenunve.
Feta Alawi, Minister of Economy and Finance of the Kingdom of Morocco, Madame Neza Hayat, Chairperson of the Autorité Marocaine des Marchés de Capitaux, Mr. Kamal Mokdad, Chairman of the Board of Casablanca Stock Exchange, dear Tariq Senhaji, Chief Executive Officer of the Casablanca Stock Exchange and host of the conference, distinguished CEOs, members of the ASEA Executive Committee, distinguished ASEA members, dear speakers, ladies and gentlemen. First of all, I would like to extend you all a warm welcome to the 24th African Securities Exchanges Association Annual Conference. ASEA is the premier association of 26 securities exchanges in Africa with 2,400 listed companies for a total market capitalization of over 1,600 billion US, representing 61% of the continent's GDP. Our mission is to engage all the African capital market ecosystem in order to foster capital mobilization, promote sustainability, and enhance financial inclusion in the benefits of the Africa's economic development. Distinguished guests, ladies and gentlemen, the annual conference is the association flagship event and brings together the entire continent's capital market industry to discuss the challenges and the future of our exchanges and market infrastructures. This year, in the context of COVID-19, the Casablanca Stock Exchange accepted to host the 24th annual conference for the first time in a full digital format. Allow me to congratulate Mr. Senhaji and all his team of the preparation and the organization of such a great event. The theme of the conference, Financial Markets, Key Driver of the African Emergence, will give us the opportunity to shed light on the role of African stock exchanges in accelerating the post-COVID-19 economic recovery by financing infrastructures, SMEs, and innovation on the continent. These issues will be addressed by many experts from the financial industry and stock market sectors, as well as international opinion leaders. Distinguished guests, ladies and gentlemen, this conference comes once again to show the resilience of the African capital markets, and I hope that the key takeaways of the conference will make it possible to position our exchanges even higher. I wish you all fruitful discussion and officially declare the 24th ASEA Annual Conference open. Thank you for your kind attention.
Thank you, Mr. President of the ASEA, Dr. Edo Kosi Amenunve, for the welcome remarks. We are now honored to welcome Her Excellency, Mrs. Nadia Fettah Alaoui, Minister of Economy and Finance of the Kingdom of Morocco.
It is a great pleasure for me to participate in the opening of this 24th annual conference of the African Securities Exchange Association under the theme Financial Markets, Key Driver of the African Emergence and Post-Pandemic Recovery. I would like first to warmly thank the African Securities Exchange Association for this initiative and for its constant commitments in favor of strengthening cooperation and exchange between the various stock exchanges of our continent, especially in this particular context of the crisis. I would also like to thank the Casablanca Stock Exchange for organizing this event and for the means and conditions implemented to ensure its success. The theme chosen for your conference is strongly relevant, placing the emergence and post-crisis recovery strategy of our economies at the center of the debates of this annual conference. Ladies and gentlemen, the world went through a very difficult period. Last year marked by the spread of the COVID-19 virus, which continues unfortunately today in several areas of the world with the new waves of contamination. This situation has pushed all of us without exception, governments, regulatory authorities, markets, and citizens, to respond in a voluntarist and vigorous manner on all fronts, in particular in health. It is in this sense that in addition to strict lockdown at the beginning of the crisis, Morocco launched an early vaccination campaign in order to return as soon as possible to normal life and ensure the revival and the dynamic of the economy. Under the guidance of His Majesty the King, may God assist him, a special fund has been set up for the management of the COVID pandemic, which has benefited from a great outpouring of national solidarity, having made it possible to fund more than 3 billion euros to deal with the fallout from the health crisis. These resources have been allocated to strengthening the medical system and public aid to mitigate the impact of the lockdown on households operating in the informal sector and businesses, particularly SMEs and very small businesses. After these emergency measures and the gradual reopening of the economy, our country set about preparing the post-COVID recovery plan, where the objective is not only to promote economic recovery, but also to strengthen and accelerate the foundation for the transformation of our economy, its resilience and its capacity to provide adequate responses to the needs of economic agents. In this context, Morocco has launched a recovery plan under the leadership of His Majesty the King, which provides for the injection of 120 billion dirham into the national economy, nearly 11% of the GDP, through two specific mechanisms. The first mechanism is based on a new guarantee offer aimed to mobilize 75 billion dirham in the form of guaranteed financing for the benefit of companies. The second mechanism is carried by the Fund Mohammed VI for investment, which marks a new dimension of the action of the state in the support of the economy, with the objective of mobilizing 45 billion dirhams, of which 55 billion are coming from the state budget to provide businesses and viable infrastructure projects with the equity or the quasi-equity necessary for their development. The objective is to support the growth of the high potential SMEs, to promote the financing of infrastructure with strong economic and social benefits, and to support the development of strategic economic sector for the national economy. The Fund Mohammed VI, in its philosophy, is based on an approach that targets both economic impact and financial profitability, at the same time opening up opportunities for private investment in funds and market instruments that it promotes. Ladies and gentlemen, as you have seen, the recovery plan being implemented in our country devotes a growing role to the capital markets through the development of investment vehicles and, by extension, the diversification of the range of investors and market instruments to support post-crisis investment in several priority sectors, in particular infrastructure. These choices are justified for several considerations. With regard to infrastructure, first of all, the private sector, beyond the allocation of financial resource for its financing, will be able to contribute to improving the quality of the public services provided and to meet the needs of our fellow citizens in basic equipments according to their aspirations. In addition, recourse to private funding sources will make it possible to deal with the tightening of budgetary margins exacerbated by the health crisis and to help preserve our macroeconomic balances. As regards of the financing of companies, and particularly SMEs, the establishment of an equity financing offer has a dual objective. On the one hand, consolidate the financial soundness of company and deal with the undercapitalization problems that some of our SMEs suffer from. On the other hand, allow these companies to better position themselves in the dynamic of repositioning national and global value chains. chains. The axes that will be discussed in your conference are perfectly in line with these choices by focusing on how the capital markets and the stock exchange in particular can accelerate post-COVID economic recovery, can finance the continent's government and infrastructure, can help public enterprise finance their development and diversify their source of fundings, can also help mobilize the capital needs to private companies, especially SMEs looking for opportunities for business expansion and job creation, and supporting structural transformation and African economic integration, innovation, and financial inclusion. Ladies and gentlemen, the success of stimulus strategy depends to a large extent on the level of development of our capital markets. It is for this reason that structural reforms are being undertaken in this compartment as part of a development strategy prepared in consultation with all the market players. I would like to come back to some of them. The adoption of a set of legal and regulatory reforms aimed at strengthening financial transparency and stability with increased powers and means of intervention and coordination granted to regulatory authorities, in particular to cover systemic risks. The market infrastructure and launching work to set up the infrastructure of the future market through the creation of a clearinghouse and the company managing this market. The diversification of financial instruments offered to companies via the overhaul of the legislative framework governing collective management, OPCC and OPCI, and the securitization and promoting of new instruments dedicated to infrastructure financing through debt funds, project bonds, and risk coverage. Ladies and gentlemen, you will certainly have the opportunity through your conference to exchange, debate, and explore the different themes that I have just addressed and that each country can enrich through its experience. In this regard, allow me to come back to certain points that seem important to me in order to accelerate the dynamic of economic recovery and the emergence of our economies in a rapidly changing world. First, the imperative to accelerate cooperation and integration within our continent, because together we are stronger and we can go further and faster. Several initiatives have already been implemented or are in the process of being implemented. In this sense, I'm thinking in particular of the actions taken with the framework of the African Integration Zone, but also of projects such as the African Exchange Linked Project carried by ACAA and the support of the African Development Bank, the rapprochement of African security exchanges through double listing, or even the promotion of regional and continental investment funds like the Africa 50 Fund. I am also thinking of the role that an African financial center, such as Casablanca Finance City, can play, which offers a platform to accelerate financial integration and attract the expertise and international funding necessary to contribute to the development of our continent. Then, the importance of reflecting on innovative financial solutions to strengthen the role of the capital markets in terms of financing the economy, ensuring better channeling of savings, local and international, towards financing the transformation of the economy, our economies, and to better integrate global value chains. Finally, the needs to take into account in our priorities in terms of capital market development and financial integration, new paradigms of the global economy, In this case, the aspect of sustainability and the disruption created by the digital evolution. For the capital market, it is about embedding green finance and fintech as priorities in their development. I wish you a very fruitful exchanges, and I will be listening to your proposal and recommendation following this conference. Thank you, ladies and gentlemen, for your attention.
Thank you, Your Excellency, Mrs. Nadia Fettah Halawi, for your vibrant speech and for opening officially our conference. Without further ado, let us now welcome Madam Chairperson and CEO of the Moroccan Capital Markets Authority, Mrs. Nezha Hayat.
Minister of Economy and Finance of the Kingdom of Morocco, Mr. Edo Kosia Menouve, President of the African Stock Exchanges Association, ASEA, Mr. Kamal Muqdad, Chairman of the Casablanca Stock Exchange, CEOs of African stock exchanges, ladies and gentlemen, it is an honor and privilege to be part of the 24th ASEA Annual Conference to discuss our African capital markets and the key drivers for their emergence. Over these 2 days panels, eminent experts from the ASEA community will share their insights and highlight the crucial role of capital markets in the development of Africa, particularly in a post-COVID recovery context. Therefore, I want to thank you all for your efforts and contributions to deepen, broaden, and improve the growth of capital markets on our continent, especially through the African Stock Exchange Association. In 1993, when ASEA was established, only 5 African stock exchanges existed in Egypt, Kenya, Morocco, South Africa, and Zimbabwe. In contrast, there are now 29 African stock exchanges, including 2 regional stock exchanges in West and Central Africa. Today, ASEA member exchanges have reached a market capitalization of $2 trillion, representing more than 1,100 large African-listed companies. Hence, ASEA has the potential to transform the African capital markets landscape through its deeply impactful projects, such as the African Exchanges Linkage Project. This project, that is jointly sponsored by ASEA and the African Development Bank, will establish a cross-border order routing platform between brokers of 7 African exchanges for its initial phase, thus stimulating Pan-African investment flows, as well as providing liquidity and depth to African markets. Ladies and gentlemen, Africa's strong economic performance in the last 2 decades has attracted the interest of international investors. For example, according to the IMF, amongst the 4 countries with a growth rate of above 5%, 2 were in Africa. A further 16 out of 35 countries experiencing positive growth are also located in Africa. In addition, African economies have showed a certain resilience during the COVID pandemic, as GDP contraction was limited to -2.1% compared to -4.4% for global economy. Hence, African stock exchanges have a key role to play in financing future economic growth of the continent and offer real opportunities for developing the financial sector as a whole. Indeed, one of the most pressing issues for Africa is to channel financial flows towards productive investment. As an example, the African Development Bank estimates that Africa's infrastructure financing needs could reach around $170 billion per year by 2025, with funding gaps of up to $108 billion per year. Accordingly, capital markets will naturally be called upon to supplement existing public and banking resources and to bridge the huge financing gaps. To efficiently play this role, African capital markets should work collectively to strengthen their competitiveness and attract global investment flows, to promote their resilience, to create opportunities and address the needs of various stakeholders. As a capital market regulator, I believe that the success of financial markets relies heavily on the quality of their regulatory frameworks. Therefore, relevant market reform should aim at improving market oversight, diversifying financial product services while widening the investor and issuers base, addressing the issue of market fragmentation through legal harmonization and cross-listing at regional level. Much needs to be done, as African stock exchanges are facing significant constraints like limited diversity of financial instruments and a limited number of listing stock. In addition to market illiquidity, high transaction costs also prevent further development of exchanges. African capital markets should also work to address local specific issues, among which providing financial solutions to SMEs that constitute the bulk of the economic ecosystem, as well as improving financial inclusion and literacy among the population. In addition to these issues, there are overarching global themes that have become paramount aspects to address when thinking strategically about market development. First, fintech or technologies like blockchain, artificial intelligence, and big data, among others, are deeply transforming business models, and financial services are no exception to that. While these technologies have the potential to ease access to financial services, improve financial inclusion and literacy, they constitute a challenge that all markets and regulators have to cope with. Second, sustainable finance and the aligning of financial sectors on sustainable development have also become a necessity to meet the SDGs agendas and the country's commitments to address climate change. All these challenges present opportunities that should be leveraged for developing our markets. Developing innovative solutions will require extensive collaboration between African regulators, exchanges, and other policymakers. I am convinced that initiatives like ASEA help us coordinate our efforts to address common issues and challenges. Thank you for your attention, and I wish you productive discussions throughout these 2 days.
Thank you, Madam Chairperson and CEO of the Moroccan Capital Markets Authority, Mrs. Nezha Hayat, for your engaging presentation. To close our official opening, let's welcome Mr. Tariq Senhaji, CEO of the Casablanca Stock Exchange.
Minister of Economy and Finance of the Kingdom of Morocco, Madam Chairperson of the Moroccan Capital Market Authority, Mr. President of ASEA, Mr. Chairman of the Board of Bourse de Casablanca, dear CEOs and Presidents, members of ASEA, ladies and gentlemen. We are honored to host this 24th conference of the African Securities Exchange Association and delighted to gather during these 2 days to discuss subjects of great importance for the economic development of our countries and our continent. it is no longer necessary to demonstrate that the emergence of Africa requires a strong and relevant mobilization of its financial markets. In particular, in the current context affected by the economic and social repercussions of the pandemic, marked by risks associated to the long-term impact on certain sectors, and also opportunities in the redesign of the global supply chains, we, African stock exchanges, need to act as engines of development at the service of the economies of our countries and the economic growth of our continent. Stock markets have the capacity to mobilize savings, to finance companies, and to properly allocate risks, and thus sustainably support economic growth and financial stability. As such, we need to operate in a way that serves the continent's economic recovery. We need to improve our product offerings and strive to become more relevant for the financing of the real economy, getting closer to the need of SMEs and large corporations looking to grow. To do so, we need to collaborate with all the stakeholders of our financial markets and to build a common vision to further modernize the stock market to make it both more attractive and more accessible. In particular, we need more than ever the support of the public authorities to boost our stock markets, in particular through recommendations and incentives for the private sectors, as well as through the use of stock exchanges for the financing of public infrastructure and state-owned institutions and companies. We will also, and above all, benefit from the experience and expertise of our different countries, and this conference is the ideal opportunity to do so. Ladies and gentlemen, before yielding the floor, allow me to warmly extend my thanks to Her Excellency Nadia Ftah Alawi, Minister of Economy and Finance of the Kingdom of Morocco, for her support and commitment, proving once again the importance of a dynamic stock market for economic policymakers in this country. Also, to thank Mrs. Nessa Hayat, the chairperson of the Moroccan Capital Market Authority, for effective involvement in the modernization and the development of the capital market, particularly Bourse de Casablanca. Last but not least, to thank Dr. Edo Kosi Amenenunve, the president of ASEA, as well as all members of the association for the trust and confidence you put in Bourse de Casablanca. Ladies and gentlemen, I wish you a very constructive conference. I hope it will be an opportunity to unite our efforts and build momentum toward effective development of our capital markets in order to help a prosperous, solid, and sustainable Africa. Thank you.
Thank you for your engaging contribution, Mr. Tariq Samhaji, CEO of Casablanca Stock Exchange. Now the time has come for our opening panel, where our distinguished speakers will identify the main challenges and keys to take the African capital markets to the next level and discuss the economic and regulatory reforms required for developing the African capital markets and building a resilient market infrastructure. Without further ado, we wish all the participants of the conference productive discussions and hope that you will help renew our efforts towards the achievement of an effective development of the African capital markets.
Changes more than 40 years ago. What most people don't know is that Nasdaq is a technology company by its core. Today we provide technology to more than 250 clients in more than 50 countries across all types of markets in the world.
The partnership between SGX and NASDAQ is more than a decade now. We are a multi-asset exchange. Our business is vertically integrated and we have an international presence. Technology is no longer separate from business. It's really about how we are reshaping business.
Tabcorp's vision is to be the trusted gambling entertainment company. Our wagering business, Tab, is Australia's largest multi-brand wagering company across digital channels and retail. NASDAQ's merge pool technology allows us to bring new products and opportunities to our customers.
You're joining us for this exciting Asia conference on financial markets. Welcome everyone to our opening panel. We've got a great group of panelists presenting to us today. So without further ado, I'm going to present Mohamed Rashid, who is a Director of Financial Markets at the Casablanca Finance City and is also a board member of the Casablanca Stock Exchange. Mohamed?
Thank you. Good morning. Thank you, Christophe. We go ahead, Christophe.
Yes, Mohamed, if you can start your panel, your speech, please.
Okay. Good morning. Thank you. I want to thank the African Stock Exchange Association and the Casablanca Stock Exchange for the organization of this conference and for the invitation to participate to this opening panel. First of all, I have a great pleasure to seize this occasion to say some words about Casablanca Finance City as a financial hub and the road to positioning it as a regional hub. Keeping abreast of latest capital markets developments worldwide and deeply analyzing the prospects of Morocco's financial sector and the spin-offs and benefits that could accrue to the Moroccan and regional economy, Casablanca Finance City Authority, with the Moroccan authorities, prepared an integrated development strategy to further develop our financial markets. In implementing this integrated strategy, Morocco launched the development of Casablanca Finance City to serve as the vanguard of Morocco's ambition to be a regional financial hub, to finance the development and the growth of the African economies. The CFC Authority has been established to lead and coordinate the country's efforts in the achievement of this ambition. Today, the efforts made are delivering results. CFC is the leading African financial center according to the GFCI, the Global Financial Centers Index, a ranking elaborated by a think tank based in London that has been studying the competitiveness of financial centers for over 15 years and has worked directly with over 30 financial centers worldwide. The think tank also believes that Casablanca has a bright future ahead of it and will certainly become more significant in the midterm, according to a recent report that concentrates on international financial centers that have been identified as the most likely to become more significant in the next few years. For the development of a sound financial center, we identified here in Casablanca Finance City Authority various tasks. We prioritized the steps and key actions that need to be taken for the long-term development of Morocco as a financial hub. Certain factors and prerequisites are more important than others, and a well-developed domestic financial markets is one of the top priorities. So to be a more successful regional financial hub, Casablanca must be able to attract financial institutions which play a key role in matching the needs of both investors and issuers to establish operations in the city. It's true that today CFC is trusted, proven gateway to Africa. It's offering a unique lifestyle, an active and engaged network, and an assured business environment in a vibrant, safe, and beautiful country. But we have an attractive, physical and other soft infrastructure. We have incentives that are very important in attracting a critical mass of financial intermediaries to be established in Casablanca Finance City to conduct regional financial business and to firmly establish the financial ecosystem in the city. But we still have some challenges. We still have some challenges and issues that would need to be further reviewed and addressed to develop more conditions necessary to be an African financial hub, where on the one hand, African entities raise capital and conduct financial transactions through Casablanca, and on the other hand, international investors finance suitable African opportunities through Casablanca. A push or a key push to this plan was to develop the Casablanca Stock Exchange as a market for the listing and trading of shares of suitable African companies, providing such companies an avenue for fundraising. This is why we amended the Casablanca Stock Exchange laws, rules, and regulations to make this possible and to allow the listing of shares of African companies on the Casablanca Stock Exchange. Another push could be to catalyze the cross-listing of more African companies on the Casablanca Stock Exchange. That would have a significant impact on Casablanca Stock Exchange overall market capitalization. List more African companies on Casablanca Stock Exchange will increase market capitalization, and weight in international stock indices. A higher market cap would allow for Casablanca Stock Exchange to command a higher weight in the more widely tracked international benchmarks, example MSCI, FTSE, for the MENA region or for the EMEA region. This would in turn encourage more international investors to focus more attention to invest in Casablanca Stock Exchange listed African stocks. It's also the aim that the availability of African securities on Casablanca Stock Exchange and other African stocks exchanges would attract international fund managers and investors who wish to gain exposure to the African region to locate their operations in Casablanca and the other African capitals instead of locating them outside Africa. This will create higher value, well-paid job opportunities, not only in Casablanca, but also in the other African cities, therefore benefiting Africa's economic development and growth. As a multi-hub, multi-entry point for regional listing, international securities companies and investment banks would be attracted to base themselves in Africa. International asset managers and other investors, such as private equity managers interested in Africa, would similarly be encouraged to site themselves in Africa to take advantage of the closer proximity to investee companies in the continent. The third key point is providing African and foreign stockbroking firms more direct access to African stock exchanges. Great direct access by foreign-owned stockbroking firms could help generate more interest by international investors in the African stock markets. Direct access by foreign stockbroking companies would make it more attractive for such firms to invest in building apps, research, and marketing capabilities in African stocks, and help further improve the overall coverage of the African stock markets to international investors. Foreign participation could also bring new skills, expertise, and products to the African stock markets. We can start by giving African stockbroking firms more direct access to African stock exchanges as a first steps. The creation of such an ecosystem, combining stock exchange linkage, cross-listing, foreign listing, direct access, would in time generate greater transactions and activity in the continent. These connected platforms for the financing of companies doing business in the continent would also be seen positively by the participating African stock exchanges as a win-win initiative, helping to further boost the positioning of the continent as the new frontier for global growth. Thank you very much.
Thank you very much, Mohammed. I'd like to give the word now to Dr. Mohammed Farid, the Executive Chairman of the Egyptian Stock Exchange. Dr. Farid.
Thank you, Christophe. I would like to thank the entire panel, and I would like to thank the organizers, the Casablanca Stock Exchange, for this event and for continuing and reviving our activities at ASEA despite the COVID for several years now, for several months, more than 1 year, bottom line. So basically, it is a good effort that we all should commend it, honestly speaking. When it comes to capital markets and its role in the economic activity, and how can we, I would say, enhance and expedite the penetration or the activity of capital markets, I don't think there is one magic wand that any, I would say, policymaker, exchanges, regulators can be swinging and achieving the targeted, I would say, activity in the market in terms of allowing companies or increasing the number of companies that are allowed to or do capital increases or gets listed and so on and so forth. I believe it has to be looked at from a value chain perspective. You need to look at the supply side. As my colleague Rashid mentioned here, the supply side is quite important, and I'll be discussing some points in it. And then the intermediation aspect associated with exchanges and the trading activity and the mechanisms of trading as well is one aspect that enhances, I would say, the price formation mechanisms that is the main core function of exchanges. And at the end, you have the demand side that needs to be looked at and to cater some policies for improving the demand side in the entire value chain of capital markets or exchanges. But bottom line, when we look at the supply side, And there are aspects that have been tested, but it hasn't been followed on, I would say, with other policies. So, for example, we all in Egypt, I'll give a brief example, and then maybe I'm going to refer to some Eastern European countries. In Egypt, when we wanted to reinvigorate the role of capital markets, we opted for a very, I would say, successful and aggressive privatization program. And hence you improved or increased the supply side extensively in 1992, 1993, and with the ultimate aim of increasing the supply side and availing different products in front of investors from this one hand. But this is always not sufficient if you're not catering for the business environment itself and to cater for other needs of the private sector companies. Yes, there has been a follow-on to this activity, either that happened in, I would say, 1992, or when it happened in 2004, whereby we've seen some activity. We've seen some activity in the market in terms of private sector companies coming, but this needed to be followed with policies that are really aiming for having a sustainable path of supply side to come to the market. And saying that, I believe the tax and the government are playing, should be playing a very important aspect in that regard, and the regulators as well. So if we are really aiming for increasing the penetration, we all listen or hear the point of capital markets are the mirror of the economy. I don't know if this is a saying usually being said back home in the economy in Egypt. I'm not sure whether it's being said worldwide. However, it's said worldwide in a different way, that capital markets or stock exchanges do reflect what is happening in the economy, more or less, which is the efficient market hypothesis basis, basically. But however, for this reflection to be a proper reflection, I believe we need to have more companies to be represented in the exchanges. Otherwise, how can you say that this is reflecting what's happening in the economy if you don't have sufficient representation of companies that are sizable enough to be reflecting what is happening in the real economy in that regard? So this was a clear point that we put forward with the government back home in Egypt, and we came up with some incentives, I would say, on equity swaps, some incentives for IPOs in terms of taxation, in terms of a reduction in taxation for the first-time IPOers. IPOs conducted via capital increases are not to be taxed at all, given that the money is not being taken by any investor. It is actually poured in the company again, and so on and so forth. And we are pushing hard with them to reinvigorate the privatization program. Here we need to understand that the level of development of the economy and the exchange, it varies definitely from one country to another. And hence the importance of having, in our cases, like the emerging markets, is to have a proper, I would say, IPO program that is privatizing or availing the product to the entire community, more or less. And then you come to the intermediation, which is the role of the exchanges. Of course, the supply side has to be coupled with proper governance, proper disclosures, all of the, I would say, normal prerequisites of exchanges to support, and add to it as well the sustainability aspects that we're looking at. Intermediation, we can talk about it extensively. However, I would want to talk about the demand side before talking about intermediation. Demand side, it requires two aspects, if you ask my opinion, or actually more than two aspects. But the first one would be the intermediators, which are the brokerage companies, investment banks, and so on and so forth, need to be able to productize capital markets. I believe exchanges, stock markets, or stocks in particular, are a very important inflation hedge tool if we're talking about 20-25 years of incremental savings and investments. However, the ultimate problem with investors that they don't have sufficient productization of these particular securities that they can be penetrating the market without going through the hassle of stock picking. We all know that the most difficult aspect of investing in capital markets is about timing and about choice. What am I supposed to buy, and when am I supposed to buy it and sell it? So basically, This is a crucial aspect that needs to be taken into consideration. So productization of capital market products is a crucial aspect that everyone needs to be putting sufficient effort. Marketing of these products is another important aspect. And then we need to look at penetration, and hence would be the reliance on financial technology and adopting regulations that would allow for electronic KYCs, electronic identification, electronic onboarding with certain thresholds, of course, to not to violate anything associated with the FATF, the Financial Action Task Force, related to money laundering and all of these aspects. It's very important to maintain this. However, you need to allow technology to help capital markets in terms of penetration. We are all aware that the KYC, the paper KYC is quite, I wouldn't say deterrent, but it is slowing down the process of quick onboarding of potential investors in that regard. And if this is not coupled with particular products that would cater for the needs of those investors, then we'll be having an issue in that regard. And of course, if this is coupled with potential and proper institutional investments by pension funds, insurance companies, and as well like the 401k of the US, which is quite important, and it always adds to the potential demand and potential long-term saving of investors. If we look at any market, and by the way, this is not an Egyptian case, or I read it in one book talking about the NYSE probably in the 1980s, that the ultimate target and the ultimate marketing material for them was the incremental saving approach through the stock exchanges and through capital markets, that if you want to have a wider and bigger and much stronger and wealthier middle income class, you need to come up with venues and technologies that would enable people to save more and to do it on an incremental basis, and hence they don't get affected with the market volatilities that can be witnessed, like we have witnessed all in the COVID until March and so on and so forth. So this is more or less, I would say, the aspects that we need to be looked at in general to boost the activity of capital markets. And all of that, we needless to say, is consumer protection, or investor protection. So without having the proper policies for consumer protection, investor protection, and a good quality intermediation in terms of risk management processes and so on, you need to complete the cycle. Bottom line, complete the cycle of having proper auditors, proper intermediators, good quality products, and so on and so forth, to complete the cycle and see. In terms of the supply side, again, I believe Eastern European countries in the 1990s, they all adopted a mass privatization program, and here jump-started the entire, I would say, activity of capital markets, by having the government itself going public and IPOing plenty of government-sponsored companies. So I believe that would be the points that I was aiming to cover. I don't want to take more time than I'm allowed to. So thank you.
Dr. Farid, thank you very much. And that was a fantastic transition to Alexey Pivovarsky, who's the Capital Markets Development Director at the BRD. Alex?
Thank you very much. Just wanted to say thank you for the organizers, ASEA and the Casablanca Stock Exchange, for the invitation to speak. We are at the BRD a relative newcomer to the African market. So perhaps just a couple of words about us. We were established in 1991 to help transition, post-socialist transition in transition countries, and now operate in 38 countries. And since 2010, operate also in parts of Africa, in Northern Africa and Mediterranean region, including Morocco, Egypt, and Tunisia. And indeed, we have a specialized team at the EBRD dedicated to capital markets development. And it's a kind of a tribute to the view that we prioritize this. We believe that an impetus for growth and for further development can come from capital markets. We have quite a wide toolbox, including capital market instruments we try to advance, but also technical cooperation funds and resources. So we work with authorities, investors, and companies we are trying to support. So I guess in this panel, we have to be somewhat humble because we don't operate in much of Africa. So I would say my goal is maybe to reflect on some lessons we learned from the broader region. And indeed, as Dr. Farid said, that there are possibly some lessons from Eastern Europe, from transition countries for other regions. And so. And perhaps just to begin, I will say a few words about how we view the state of financial and capital markets. Just a couple of weeks ago, we launched in our flagship transition report, the Financial Markets Development Index. And so I wanted to share just a few slides kind of to set the stage. First of all, we have observed that over the past 5 years, let me see if I can move to the next slide. Oh, moves very quickly. So over the last 5 years, we continue to watch and see that there was actually an improvement in terms of legal and institutional environment for capital markets in most of our countries of operations. And in fact, there are very few or no countries where there were reversals. So if you look at the legal reforms and quite a few countries, including in the region, have made progress. Of course, we see that progress in institutions is sort of correlated with GDP per capita, but there are quite a few countries that stand out, and so there are questions raised about what are they doing right, what's different there. And I guess one big difference is the depth of the capital markets. There is indeed something you would call tyranny of size. Smaller economies have lower depth and perhaps as a result maybe deprioritize institutional reforms. So we see larger economies like Egypt, Ukraine, Kazakhstan, they do have, compared to, let's say, they stand out in that they have this, even if their capital market conditions maybe are still in progress, so the institutions are still developing, but actually the depth of capital market is greater there because of the size, like natural size of the markets. And of course, the countries that are in the European Union, they tend to have more favorable macroeconomic conditions, and the larger ones of those, they have a greater depth of the markets. However, some of the smaller countries, like Baltic countries, they actually are yet to get there. So equity markets remain relatively shallow throughout our markets of operations. And here we have this slide where we're trying to map institutional infrastructure, so legal environment, laws on the books, etc., versus the actual markets development. And we see that equity markets, as you go to the right, there's some kind of correlation with institutions, but again, there are countries that stand out. For example, Turkey stands out, Poland stands out in terms of equity markets development. Institutional investor base remains quite shallow throughout, but again, there are a few exceptions. Market liquidity is a big issue. I think multiple people on this panel already, so both of the previous speakers, referred to some extent to this directly or indirectly. And so there are indeed liquidity is an issue. And again, in larger markets, we look Egypt, Ukraine, Kazakhstan.
I think we may have lost Alex, so we'll give him a chance when he comes back, but would like to take the opportunity to present Nandini Sukumar, who's the CEO of the World Exchanges Federation.
Thank you, Christopher. It's as I was saying, in London sometimes we probably don't have Wi-Fi that's as good as in Casablanca. So I think Alex perhaps is victim to that. So let me my presentation today actually follows some of the themes And can I just confirm that you are that you can see it? You can see the title page now.
Yes, we can.
Good, thank you. So in thinking about what we were talking about today, which is setting the stage, accelerating capital markets development in Africa, we wanted to look at the WFE at a couple of factors. Most of you in the audience, and I think on the panel, know who we are. We're the World Federation of Exchanges. We are the global group for exchanges and CCPs, so across the spectrum from trading to post-trading. And we are headquartered in London. We have 70 full members representing about 250 to 300 market infrastructures, depending on how you want to count it. And these include standalone CCPs, etc. Of our members, 35% are in Asia Pacific, 45% are in EMEA, and that's the region in which Africa falls, and 20% in the Americas, which spans both Central, Latin, and North America. And our members really are from frontier to the world's largest markets. We have 9 members in Africa, plus 4 affiliates and our affiliates are exchanges that are in progress or will in time aspire to become WFE members. And our exchanges, we do a lot of work across multiple topics, as you can imagine. Our members globally are home to almost 50,000 listed companies. The market capitalization of these entities is 109 trillion, and around 137 trillion US in trading annually passes through WFE members at the end of 2020. We'll update that number. We have CCPs who hold, who post about $1 trillion of resources to back their positions. So in we have a database where markets across the world contribute their data. It's a large and source of exchange traded data. It's free. It's part of the public service that our industry does for the world. Members and non-members contribute. Our Africa members are 9. These are 9 exchanges. Farid is on the panel with us. 9 exchanges that have conformed to high international standards, because to become a member, you have to pass through various checks and assessments before we will accept you to membership. And those checks and assessments are basically aimed at gauging whether you are whether you are international world standard or not. In Africa, as I said, we have 9, and they range. They are in North Africa. Casablanca is a valued and dear member and long-standing. 2010, they became a full member. We have Farid, his market, his exchange became a member in 2005. But we have also our most recent member was BRVM, of course, in West Africa, and we have markets from South Africa, Mauritius, but also Dar es Salaam, etc. So across West Africa, Nairobi as well. So I think we are reasonably representative of the African markets and can offer that global perspective. So thinking about today, we went back and looked at some of the numbers of the pandemic period. So period for all this data starts in January 2020, which is we thought it was a reasonable place to start. And if you look at it, it runs up to the end of September 2021. If you look at Africa, the market has recovered from the turmoil because the weighted average market index level is 14% higher in September 2021 than pre-COVID. But you see that the African market underperforms significantly, because if you look at the global market index across our universe, it's up 34%. And it's important to note that within this number are any number of emerging markets. So it's not just a gauge for large developed markets. It's emerging and frontier markets across the world. 50% of our members of this base are emerging and frontier markets. Similarly, if you look at that market index, it dropped more than 20% during the first quarter of 2020, whereas the global market fell, 16%. So in every sense, it is underperforming. There exists, looking at this slide, it shows you a large dispersion among African markets. For example, the best performing market recorded a 40% increase, while the worst was a 25% decrease over the same period. So that represents, if you like, the opportunity and the challenge of Africa. the market size is small and getting smaller. I was listening with interest to Alex's presentation. If you can tell that the African market represents really a fraction of the global market, only about 1.3% of global market capitalization of all listed companies. And over the pandemic period, African market size decreased with respect to the global market size, and it shrank by 30 basis points. And this in part could be, we've attributed it to the slower market recovery experienced by African markets. And if you look at market capitalization, which Farid and Rashid have both touched on, and Alex was, I think, going to talk about, you see the trend continuing. At the start of 2020, market cap 1.2 trillion, global was 76 trillion. So for me, the chart is very stark. I mean, because it shows you Africa should be doing a lot better. It's a continent. At the end of 2021, market cap 1.3 trillion compared with 106 trillion. So even the bounce back was not as pronounced as with the global trend. Value traded, similar story, 35 billion, and you have to congratulate African markets and exchanges for being as robust and resilient as they were. 35 billion US dollars, that's a lot per month. And it's up from 2020 level. So that gives you a sense of the turmoil of the pandemic and the fact that the markets here have the capacity and the resilience to handle that. But if you look at the global average, it was 1.6 trillion, and that was 87% higher than the January level. So, there is an opportunity there for Africa. And this is the slide that really, brought home to us. I think Farid has talked very evocatively of it. If you look, this is a time, the COVID period has actually been, in some ways, a time when people have remembered the value of public markets. So globally, if you look, companies came in record numbers to the market to use it to raise finance. And July, we believe, will at some point be a record. I mean, it's a historic high. But more than 300 IPOs were recorded in July 2021 alone. But in this period, there have been no new IPOs, in Africa. And then the final kind of slide, if you want, looking at the numbers, we see that bond market financing is the primary source for raising capital in Africa. We all know this, but on average, only 5 cents are raised through equity for every dollar raised through bonds. And if you look at the global market, that's 14 cents for every dollar. So really, there is an opportunity here for Africa, for the capital markets, to change that, that reflects the opportunity. Instead of looking at it with gloom, we would say this is an aspirational target now to where we can go in a shorter period of time. I don't think 14 cents for every dollar raised to bonds should be a global norm, because that number the 14 should get higher and higher. But for Africa right now, there is that opportunity that reflects a good aspirational target. So what now? We're in action menu, a path forward. I mean, we've spoken about this, some of us, and Farid and I certainly have had many conversations about this. How do you get there? You have to obviously support and nurture your regulated public market. And I thought the remarks, the presentation which looked at Casablanca was fascinating because it illustrates, some of the proactive and innovative steps that the country is taking, have direct levers. Then you create that enabling ecosystem through policy levers. And regulation really needs to be a tool for growth, in addition to being a tool for investor protection. And one of the things we see, especially in emerging markets, is it's too often a tool for investor protection and not enough tool for growth. There should be policies that improve and enhance liquidity through new products, innovation, and develop local and then international investor bases. I think Farid gave us a good snapshot of what the Egyptian market was doing. And do not fear volatility, manage it. And I think, actually, since I have Farid on this, I will ask him maybe to come in a minute or two with the experience of circuit breakers in the Egyptian market. And then manage your risk. You have to create a strategy for risk management and for post-trade. There is a point in the cycle where derivatives become relevant to the market and you need a CCP. And then, of course, financial literacy and investor education. I'm going to conclude on a note of public policy, because that is what we do at the WFE. That is what we live with. All these challenges can be solved in time, public policy levers. And I think the questions that we all need to answer to create that public market, that capital market that will develop are these in front of us. You know, first, how do you create a market that's attractive to investors, where investors think of as a place to finance or to trade rather than going to the debt market? And that's really quite a profound question. There will not be one answer. Fareed said there's no magic bullet. I agree with you. And that answer will be specific to every nation across Africa. It will be different. How do we build a culture of listing? How do you bring companies to market? You know, the example I want to give is we have in our membership markets in China, and they always have huge IPO pipelines. So we asked them at one point, how is it that you have so many IPOs where the rest of the world, exchanges across the rest of the world are thinking every day about how to get companies to IPO, you know? And the answer was that there was just an inherent belief in China that companies grew up and knew that eventually their destination would be an IPO. How do we get to that place? How do we boost liquidity? I think Fareed has talked about that a little bit. We did an excellent paper a couple of years ago looking at the issue. It's available on the website. I don't have time to run through the findings. How do you manage volatility? And perhaps Fareed can talk to us a little bit about his circuit breaker innovation in Egypt. How do you build that strong? First, you have to have a strong domestic institutional investor base. And then how do you attract international investors? And then how can you boost retail participation in African markets? This is something really comes later, but it is in some ways the holy grail of public markets, because once you have retail, you do need investor protection, but it is obviously the most profound tool for inclusive growth. And finally, I'm going to say this, how do you create the story of Africa's promise? Because I think that is an important part of the effort towards developing your capital market. So let me go back, and hopefully Alex is back by now.
Nandini, thank you very much. Alex, we'll give you a chance to finish the presentation, if possible, if you can try to do it in 3-4 minutes, because we have many questions from the audience and from myself, and I'd like to have a bit of back and forth discussion.
So thank you so much, and apologies. Despite all of the testing and efforts, the internet sometimes fails. So I think that really the main message from the presentation was that depth is not there. Larger economies are doing better in that regard. Institutional investor base is still very limited in many of our countries. And it leads to, and also governments are still quite active players, indeed, both on the IPO side, but also on securities, debt securities listings. And so corporates are not as active yet in capital markets throughout our region. So I think we could probably remove the presentation at this point. And given the time constraints, I just wanted to say a few things about what type of solutions we have been advocating for and trying to pursue in our region. So one of the approaches we've supported is kind of regional solutions, cross-border solutions. For example, SCE Link, which brings together regional infrastructure for trading of securities in the Western Balkans region, because there are quite a few smaller countries there. Or quite actively engaging in the Pan-Baltic capital markets development, supporting including aiming to support common market classification for the three countries. And in Africa, by the way, there is a kind of precedent in West Africa, in the West African Union, of a common classification. Helping exchanges explore cross-border solutions and acquisitions. So, for example, one ongoing process is Warsaw Stock Exchange declared that they would acquire Armenia Stock Exchange, and we actually work with Armenia to kind of help them articulate the strategy for such integration. Connecting energy markets to capital markets, so having kind of common platforms for energy and capital markets. This is something, because energy markets are developing in some of the countries faster in a sense than capital markets. And then doing some work on the micro side, that's enterprise level, research coverage programs, supporting some SMEs that could potentially tap capital markets in Western Balkans and Baltic countries, so in smaller countries. Some of these SMEs are kind of larger maybe for their market, but for global markets, they would be relatively small, and working to launch new products. So again, in a crisis in particular, we discovered that there were opportunities for new product launches. For example, commercial banks in certain countries became a bit more conservative, or somehow single obligor limits were reached, etc. So we launched a commercial paper, which is a very common product in developed markets, but actually in many of our countries never tested. So we launched it in the Baltic countries, now preparing in Egypt. We have worked on launching CPI-linked bonds, sustainability-linked bonds, supported that in several countries, including recently in Romania and in Greece, and supporting municipal bond issuances. And I would say, before I conclude, maybe a couple of other points. One is that we see that some growth of the markets is coming from ESG or green capital market products, partly because there are opportunities there for blending or tapping resources of larger players like European Union. So a form of blending where it could encourage capital market development because of de-risking of some of the products. And of course, we see fintech driving some of the solutions, and some of the countries are experimenting with the regulatory sandboxes. We have supported those that work in Greece and Poland. Some digitalization of post-trade infrastructure, fintech accelerators emerging. We've supported those as well. So I don't think I want to go much further into many of these, several of these areas, but I think that perhaps there's a chance for in the conversation to touch upon it as we proceed. Thank you very much.
Alex, thank you very much. Mohammed Rashid, when Dr. Farid spoke, he mentioned some of the changes that the Egyptian government has announced in the last couple of weeks in terms of eliminating or reducing stamp duties and taxes on IPOs, as well as what the Financial Regulatory Authority has done on some margin purchasing. Wanted to ask you, based on your experience in Morocco, what do you see as the main regulatory improvements that can be made to help African capital markets develop? Mohammed, you're on mute.
Sorry, thank you. I said that I completely agree with this key point, because regulatory environment is a real challenge that would have to be dealt with to help achieve our ambitions to have more developed African capital markets. Here in CFC, we experienced this issue, and one of the solutions based on best practices and international capital market developments was first the need of a new approach to lawmaking for the financial sector. It's important that the regulatory framework and the legislative process should facilitate timely introduction of rules and regulations to keep pace with and facilitate market development. This is particularly essential for financial centers, which aspires to play a regional role by attracting international financial institutions to provide products and services to the whole continent. We experienced this in many laws, rules, and regulations, namely the one related to Casablanca Stock Exchange. Now we have the general principles and provisions governing the operations of the capital market are set out in the law, but rules and regulations or directives for the purpose of implementing these rules or this provision of the law should not be in the law to facilitate innovation and introduction of new rules to keep pace with market development. The second one is the need to have a new omnibus law to govern capital markets. The single omnibus legislation in which all the relevant capital market laws are brought together under one roof. This will make the law more comprehensive, the enforcement of the law more efficient, and the compliance, I could say, less cumbersome. So such an approach would help provide a sound foundation for the regulation and the development of capital markets. A third, if I could say, last but not least, to improve English language proficiency. For example, a number of international financial institutions may enjoy Indian nationals to conduct research. Most Indian professionals are proficient in English, but not in French. So the ability to access information and disclosures by companies listed on stock exchange like Casablanca Stock Exchange is very, very, very limited. So as the result, they find a lot of difficulty in researching companies listed on the stock exchanges and understanding the laws, regulations elaborated or developed in French, like here in Casablanca or in the other region of West Africa. Thank you.
Thank you, Mohammed. In the last couple of weeks, on the back of the successful IPO of e-finance in Egypt, the Egyptian government has announced that they're going to try to effect 5 to 6 new IPOs before the end of the year. Alex Nandini, can you tell us, please, how important is the role of the government in the IPO market as a way to accelerate growth of capital markets?
Just to clarify, Christophe, that's the end of the fiscal year, which is the end of coming June, not the end of...
Okay, yes, thank you for that clarification.
I'm happy to go first. I mean, I think the role of the government is vital. It's primary, because there are two ways. The first is that when you have an emerging or a frontier market, the most common way to bring big companies to market is for the state-run privatizations. The second is, just on a more fundamental note, the government has to be responsible, working with the exchange to create that enabling environment which entice companies to come and list on market. If you look at the difference between conditions in the private market and the public market, that exists because the private markets, there are no requirements for, say, corporate disclosure, etc. So if you evened out some of those discrepancies, if, for example, you improved disclosure and transparency in private markets, and you would find that companies would be more comfortable coming to public markets. So these are things that the role of the government is incredibly important in.
Yeah, I can only shadow Nandini's remarks and maybe just give a couple of facts or examples, but generally, because larger firms tend to be owned by the state, so they are in a way better position for listing. And when we speak about privatization, it doesn't necessarily have to mean full 100% privatization. Relisting could be starting with minority stakes, and it can achieve multiple purposes, both help support capital markets development, but also improve transparency, governance, quality of running of those state-owned companies. There were some interesting examples in our region where we are looking at them and kind of drawing lessons. One interesting example is the National Investment Fund in Romania, where it was seeded with minority stakes originally of state-owned companies, but then many of them went public eventually and generated very good return in a way for the government, because the company is increased in value quite dramatically with the support of the fund, prepared them for IPOs. And of course, these individual investors, so some of the shares were given to people who had a kind of claims, maybe restitution or other claims on the state. They received a meaningful return on these assets. And we also see recently in the Baltic countries, some of the larger utilities are going public, and definitely it is making a significant contribution to those markets developments and bringing closer the sort of reclassification of those markets to emerging market status, which could also attract more interest among investors.
Thank you very much, Alex. Well, I regret that we were given only 50 minutes to speak. We had such a wonderful panel. I could have spent 50 minutes with each of you and had many more questions to ask. But I think we satisfied the ask of our panel. I think we set the stage for a wonderful conference. We spoke about the role of government in changing the regulations and incentivizing through taxes. We spoke about the role of government in IPO. Through Mohammed Rashid's experience in Casablanca Finance City, we spoke a bit about the microcosm. It's not just the stock exchanges, it's the whole community, the whole ecosystem, which is important. So I want to thank all of you for having set the stage for this conference, and very much look forward to the rest of the panels. Thank you, everyone.
Thank you.
C'est bon?
C'est bon, vous pouvez y aller. Thank you.
Thank you. I am very pleased and honored to participate on this important event. First of all, I would like to express my sincere thanks to my friend Tariq Sanhaji, CEO of Casablanca Stock Exchange, for giving me the opportunity to share some thoughts and ideas on the topic of climate change and financial issues in the specific context of our African continent. In order to shed some lights on this important subject, I will try to cover three main points. First, a quick overview of climate change in Africa, what are the impacts and what are the financing needs. Second point, it will be about the state of climate finance in Africa. And then, and finally, some proposal to unlock the potential of climate finance in Africa. So, although it has a low level of greenhouse gas emission, less than 4% of global emission, the African continent is severely hit by climate change. Out of the top 10 most threatened countries in the world, 7 are African. Several studies, IPCC, but also IFDB studies, highlights the devastating effects of climate change in African context, such as higher warming, and with increased heat waves and longer episodes of drought. The continent is experiencing a significant reduction of rainfalls, and the sea level will rise by more than 48 or 58 centimeters by 2100. Several ecosystems across the continents are already facing extreme difficulties because of the drying up of water courses and also because of devastating floods and strong winds. In addition to the environment degradation, the climate change has profound economic and social impacts on African societies. High losses are unfortunately to be expected in sectors like agriculture, fishery, and tourism, which are main providers of jobs for African youth. The reduction of rainfalls and combined with the frequent episodes of drought will worsen food insecurity in the continent, which will naturally lead to the rise of extreme poverty. Besides these existing problems that are exacerbating, new challenges for African countries will appear as our main international partners are moving forward in the transition to net zero. Challenges such as the deepening of technological and financial gaps, or even the emergence of new tariff barriers like the carbon tax at Western countries' borders, which will have a significant impact on the competitiveness of African exports. In a very recent report, McKinsey company estimated that without strategic action to mitigate all these transition risks, more than 1 million jobs could be lost in Africa. Hopefully, this could be largely compensated if African countries seize the green transition opportunities, because more than 3 million jobs can be created on green economies. Of course, in the face of these existential threats, African states have not remained passive. All 54 African countries have signed the Paris agreements and submitted ambitious indices. Based on AFDB Indice Hub, the financial resources required to implement the main African indices targets exceed $1,100 billion for the period 2020 to 2030. 68 needs for mitigation and 32% for adaptation projects. In terms of sectors, two major sectors represent more than half of adaptation financing needs. Those are the sectors are agriculture and of course water sector. So we can see that African countries have significant financial needs, but the local financing capacities either from the public or the private sphere, are very limited, and unfortunately have been drastically reduced by COVID-19 crisis. As you can see on those two graphs at the top, on the public side, almost half of African states have today GDP debt to GDP ratio that exceed the threshold of 55%. In the private sector, and except few countries, our financial systems are still underdeveloped and lack sufficient maturity to become a powerful source of funding for green projects. For all these reasons, access to climate finance is crucial for African countries to cope with the climate change and also to benefit from opportunities related to green transition. So how is Africa performing in terms of climate finance mobilization? To answer this question, I will use a dedicated OECD database. And first, let's see what is the share of Africa in global climate finance markets. As you see in this chart, our continent doesn't capture more than 5% of the climate finance international flows, with a predominance of public financing. And if we zoom specifically on the public side of climate finance, the share of Africa raised to become more important, around 24%, which puts our continent at the second place after Asia in terms of public climate finance commitments. When we break down these figures by country, we notice that there are 4 main African countries who are the largest recipients of climate finance commitments, namely Egypt and Egypt, Morocco, and Egypt, Morocco, Kenya, and Ethiopia. In terms of sectors, 2 major sectors capture more than half of climate finance commitments, namely energy with 26% and agriculture, forestry, and fishing with 18%. In terms of instruments, 2 major mechanisms are used to channel climate finance to African countries. Those channels, those instruments are grants with 48% and debt instruments with 50%. So we have an array of many financial instruments, but unfortunately only those 2 ones are used in the African context. So all these figures clearly show that African countries fail to mobilize enough financial resources to build climate resilient economies. Climate finance commitments, as we have seen, fall well short of our continent's needs. So to unlock the huge potential of international climate finance for African countries, we need to address key constraints that are related to the lack of binding regulatory frameworks and the complexity of, and we need to address also the complexity of mechanisms and procedures imposed by funding sources. Even if there is a growing interest on the green finance, especially green bonds, the greening of financial system is very slow across all African regions. In the private sector, there is still a problem of awareness and perception about green investment returns. And if we want to promote green finance, African countries need to invest heavily on capacity buildings of local stakeholders, and especially they need to involve the local financial systems. At the state level, we should progressively integrate climate budget into national, local, and even municipal development and planning programs. Also, new additional financial sources could be explored through, for example, the reorientation of subsidies to fossil fuels or taxation of carbon, taxation of pollution. And finally, and above all, we should work together to deepen our the South-South partnership by sharing our experience and expertise in how to cope with climate-related issues and how to size the green transition opportunities. Thank you for listening.
Thank you very much indeed for your great contribution. Mr. Adraqawi, thank you very much for your contribution. This closes our morning, so I would like to thank very much our speakers who have enriched our journey with our morning with great insights. I will give you a rendezvous to join us at the beginning of the afternoon at 2 p.m. with a great panel and presentation on the financing of governments and SOEs. Thank you very much indeed, Mr. Adraqawi, once again, and have a great day. Bye-bye.
Thank you. Bye-bye.
Invented electronic exchanges more than 40 years ago. What most people don't know is that NASDAQ is a technology company by its core. Today we provide technology to more than 250 clients in more than 50 countries across all types of markets in the world.
The partnership between SGX and NASDAQ is more than a decade now. We are a multi-asset exchange. Our business is vertically integrated and we have an international presence. Technology is no longer separate from business. It's really about how we are reshaping business.
Tabcorp's vision is to be the trusted gambling entertainment company. Our wagering business, TAB, is Australia's largest multi-brand wagering company across digital channels and retail. NASDAQ's merge pool technology allows us to bring new products and opportunities to our customers.